I was really hoping that before what is probably going to be the biggest week, or probably is the biggest week of the year so far, I was really hoping that Bitcoin would close just above that white line over there, which is a 200-week moving average. Because if that happened, that would have been our license to start buying again. It would have meant that we're back in the trend and we can start buying again. And for the whole day yesterday, Bitcoin was hovering above this little white line over here. But then at the end, at the death, as the market closed, Bitcoin closed just under the white line. So Bitcoin closed the week at 22,635, call it. And to be over the 200-week moving average, it would have had to be just over 21,750. And as I said, this is going to be the biggest week of the year. There's so much happening this week. We're going to talk about the week. We're going to break down what each event means and how it can move the price. I'm going to show you a whole lot of clues as to where this week's going to go. And then we've got Gareth Soloway on. He's coming on to give us his opinion. And remember, the last time that he called it spot on perfectly. So we're going to have fun here today. We've got Gareth here. We've got Carl here. I'm going to rip Carl off again today. We've got Jimmy here. It's going to be fun. It's going to be fun. It's going to be fun. Make sure you stay here till the end. So, you know, they said now, because we're on this mission to make this a, what did you say, a more respectable channel, you said.
Yes.
We have to start on time. So here I am. I'm starting on time every single time. Not only that, they won't allow me to play the Get the Fuck Out of Bed Bitch Go song. They just won't allow me to. Fred basically removed it from the playlist. So it's no longer on the thing. But what Fred doesn't know, you know what Fred doesn't know? He doesn't know that I have a copy of this.
That's very naughty.
Fred, what is that?
That's very naughty.
All right, okay. No more Get the Fuck Out of Bed, bitch, go. Also, we're going to start on time. Also, I have to behave myself on my Twitter now, apparently. That's how it is. You'll know why in a few days. Anyway, welcome back, guys. You are here again, Monday morning, biggest week of the year. It's going to be the biggest week of the year. I'm going to show you why this week is the biggest week of the year. And whatever happens this week, you're going to expect volatility. So even though it kind of looks like right now it's quiet and Bitcoin's at 21,836, and we've kind of been trading in this range, it's going to change. It's going to change. It's going to change. And I'm going to show you why it's going to change, because it's a huge week this year. Of the year so far. I think probably the biggest week of the year so far. So let's do this. If you're here, subscribe to the channel, like this content, help us get other people to view this. Share it with a friend. Tell people, share this content, because people that get into crypto now, people that start to absorb knowledge now, those are the ones that are going to make it in the next bull market. I promise you that. And I tweeted something on the weekend and I said, you know what? The average bear market is about 289 days. That's average if we take all the bear markets. And you're in day 256 of this bear market. So I don't know whether there's a month left or 2 months left or 3 months left, but I can quite confidently say we're much nearer the end of the bear market than we are the beginning of the bear market. I'm going to show you why I think that too. And that means that there's not a lot more time to get your portfolios in order. And the decisions that you make now, those are the decisions that are going to live with you into the next bull market. You can't expect to come into the next bull market and then make all the correct decisions. The research that you do now, the streams that you watch now, the way you position your portfolio now, that is what's going to make the difference in your portfolio between whether you're going to have an amazing portfolio in the next bull run or whether you're just going to be chasing the pump again in the next thing. I'm going to show you what I'm buying, how I'm preparing my portfolio, because the next bull market, I'm going to play it 100% right. That's for sure. All right, let's go. Just before we get into it, if you didn't watch Sheldino Tentino's show, did an amazing show this morning. Highly recommended. He went through macro, and then he went through a smaller time frame, and then he went through the trades. So there it is. Go and have a look at it. Also, if you want to come to Korea, so we're going to Korea Blockchain Week. Korea Blockchain Week's happening on the 7th to the 14th of August. It's a massive week that we got planned. Parties, multiple events. There's even the Formula E, which is the electric Formula One World Championships. If you want to come to Korea, we're not going to pay your flights, but we may give you guys a free ticket. So if you go to the referral to the description of the YouTube video, you may find a link, and in that link, just fill in your details. But please, only fill in your details if you are going to pay for a flight and come to Korea, because we're not funding your flights. And we only got a limited amount of tickets for the blockchain week. So into your details there. Tomorrow I'll start giving away those tickets. I've got to give away those tickets before the end of the month. All right, let's go. You know, it's not only the Bitcoin chart that's telling you that it's going to be a big week. And I was kind of hoping that the price of Bitcoin would have closed above this 200-week moving average. And the reason is because if Bitcoin had closed above the 200-week moving average, then that is a license to start buying. That would have been our license to start buying and to say that, you know, we're back in the trend. And we've only been below the trend, as I said to you before, 3 times. The first time was somewhere here in 2015, somewhere here in 2015. We went just below the trend, but it was very, very, very short-lived. Then during COVID, we went under the trend for 2 weeks. And now we've been under the trend this is a 6th week that we're now under this trend. And eventually, I think we're going to have to break this trend. But I'm hoping it's going to be sooner rather than later, because the longer we spend under this 200-week moving average, the more it becomes a resistance as opposed to a support. And I'm hoping that this was just a black swan event, and it will go straight over the 200-week moving average, and then it's back to business as usual. We're back in the trend, and if you're back in the trend, that's probably a good time to start buying, because what you can see is there's very few times that Bitcoin goes near this trend or below this trend. And usually what happens is it goes above, peaks, comes down, touches the trend, goes again, peaks, down, touches the trend, goes again, peaks, touches the trend. So what you know is, you know that for sure when Bitcoin does get to this trend, for as long as it stays above this trend, chances are it's going to do it again, and then you're going to get a massive pump. So for me, any time that Bitcoin goes above this trend, that's going to be my license to really start buying, to really, really, really start buying again. So I'm watching that trend, and if we close above the 200-week moving average, then I'm going to deploy capital at a much faster pace, because again, there's very few times when we're at this trend. This is one of those times, and I want to be there, and I want to make sure that I'm buying cheap when this happens. But that's not the only chart that's giving you clues about how big this week is. This is another chart that's giving you clues, and what you can see is that the DXY is now at a major, major, major trend line. So if we get good news this week, when I say good news, I mean good news for Bitcoin, good news for the stock markets, then we'll get the DXY breaking through and going down here. Because remember, we want a bad DXY. If we get a bad week in terms of all the things that I'm going to show you, then we're going to get a bounce on this off this trend line, and then we're going to go back up to the 109s and the 108s. We want this to break down so that the dollar can become weaker, so things can become cheaper against the dollar. And that's that whether or not the line or whether the chart breaks this trend line is all dependent on the events that are happening this week. And it's a huge week in terms of events. In fact, I think one of the biggest weeks in terms of events. Let's look at what this week actually holds. So let's start off with today. Today we're back. That's the big news for the day. Tomorrow we've got the FOMC meeting, which starts. And on Wednesday, the FOMC rate hike decision is expected, and everybody is expecting a 0.75% interest rate increase. So if you look at the expectations, 77.5% of people believe that the Fed will hike rates by 0.75%. But there could be surprises. There was a surprise in Canada. So Canada went for a full 1% interest rate hike, and they were only expecting, I think, 0.75%. There was also a surprise with the ECB where everyone was expecting 0.25 and they got 0.5. So there is a small chance that Powell and the Fed will actually increase interest rates by more than 75 basis points. If we get 75 basis points, that is priced in. But then it's all eyes are on the press conference, which happens a couple of hours later. And we've got to listen to that press conference, because that press conference will give us clues as to how the Fed are seeing the future. And as I've said to you guys before, I think that the Fed has one more opportunity to raise rates aggressively. That's it, because after this, the US will probably be in a recession. And what you can see is that the Fed is looking at inflation. And inflation, if you look at how inflation's made up, inflation, the biggest things that contribute to inflation are energy, as you can see here, new and used vehicles, as you can see here, food, which is a function of energy and gasoline and whatever else, and shelter. Shelter's a big one, real estate, shelter, etc. Now, if we break down what we're seeing here, we know that energy prices are coming down. We know oil prices are coming down. In fact, here's the chart of oil. You can see that the price of oil has gone down from a high of 135 back down to 104, which means that energy prices are down 25%. So we know that the energy prices are coming down. We know that used car prices and new car prices are starting to come down, and the chip shortage is getting much better. So the prices of new and used cars are starting to come down. Shelter or homes, the price of homes, that's the final frontier. And ironically, that's the biggest frontier. So everyone talks about, the stock market coming down and everything else coming down. What they don't talk about is the real estate prices. But if you look at the real estate market relative to other markets, it is 2.5 times the size of the equity market and 2 times the bond market and 3 times global GDP. So that is how big the residential real estate market is. If you look at it worldwide, that's the size of the residential real estate market. And it's a big factor in inflation. So if you want to talk about how inflation is made up, a big part of it is shelter or real estate. And what we are seeing now is we're seeing the housing market begin to cool down. So you're seeing the mortgage demand drop significantly. You're seeing a whole lot of other signs that the housing market is starting to come down. And even though this chart did go parabolic, I think it's probably starting to cool down and probably starting to come down. And that pretty much means that by September, which is the next time that the Fed meet, the inflation numbers should start coming down. So Jerome Powell has one more month. This is the last time that Jerome Powell can basically be aggressive. And I think he's going to be as aggressive as he can be because, and that I think will be a 0.75% basis point increase, 0.75% interest rate increase, because the following day, so let's go back to that tweet. But on the following day, which is the 28th, you've got the US GDP numbers. Okay, so that's a big day because that will determine whether or not the US is in a recession, or at least we think that will determine whether or not the US is in a recession. So here's how it goes. The definition of a recession, and this is as per Google. I mean, I just Googled it. It says recession. It says a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. I mean, that's not my definition. That is Google's definition, and they get the definition from the Oxford Dictionary. So I think pretty much this is like the set definition of a recession. And if you look at the data, the previous GDP numbers were negative 1.6%. And now then there's the next quarter. So the next quarter, they are expecting it to be 0.4%. That's what the consensus estimate is, that the numbers are going to be 0.4%. But. The Atlanta Fed is actually forecasting a negative 1.6%. And I think we're going to get a negative GDP growth number. And I'll tell you why I think that. Because the Biden administration is starting to warn us. Now, you know what happens when the Biden administration starts to warn you? Like they used to warn us about inflation. They're now warning us around GDP. But their warnings are very different. This time, they're trying to change the definition of a recession. So, as I said to you, the definition of a recession is, it's on Google. It says a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. Okay, simple. But what the Fed is trying to do now is they're saying, what is a recession? While recession maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of recession and economist assessments of the economic activity are based on a holistic look of the data, including the labor market, consumer and business spending, industrial production, and income. So they want to change the definition of a recession, which kind of means that they're warning us that the numbers are going to be bad and we shouldn't consider it to be a recession. Based on this data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. But I don't know, if Google says that that's what a recession is, and the Oxford Dictionary says that's what a recession is, that's got to be a recession. And it worries me when the same people that came out and told us that there is transitory inflation, that inflation is going to be transitory, are coming out and telling us that, no, hold on. Even though the definition has been one way for such a long period of time, we're going to change the definition now to suit our needs because we know the job market looks good. Therefore, we can't be in a recession. Okay, watch this. This is what Janet Yellen said.
Will be closely watched. A common definition of recession is 2 negative quarters of GDP growth, or at least that's something that's been true in past recessions. When we've seen that, there has usually been a recession. And many economists expect second quarter GDP to be negative. First quarter GDP was negative. So we could see that happen, and that will be closely watched. But I do want to emphasize what a recession really means is a broad-based contraction in the economy. And even if that number is negative, we are not in a recession now. And I would, warn that we should be not characterizing that as a recession.
I understand that, but you're splitting hairs. I mean, if the technical definition is 2 quarters of contraction, you're saying that's not a recession?
That's not the
No?
That's not the technical definition.
I mean, I don't know. I mean, I read on Google that is the technical definition of a recession. Now, she's saying it's not. I mean, could somebody just tell me what a recession is? And if I knew what a recession is, then we could decide whether or not we're in a recession. But now nobody knows what is a recession. Or, in fact, Google does know, and there is a widely accepted definition of what a recession is, but they want to change it again. They want to change it to suit their needs, just like they changed the inflation measures. And you know that they changed the inflation measures to suit them, to make the inflation look lower. So that's what we're expecting. So today we got nothing. Tomorrow we got the FOMC meeting. On Wednesday, we have the FOMC rate decision. We'll be coming to you live covering the rate decision. Then on Thursday, you got US GDP numbers. And I think they're going to be negative, and I think that's going to put the US into recession. So you got to be careful. If you're trading this week, you got to ask yourself, how are markets going to respond in the short term to what they hear? For example, if they hear that we're going into recession, how are markets going to respond to it? Logically, markets should respond positively to it. The reason why markets should respond positively to it is because a recession means that for the previous 2 quarters, the last 2 quarters, we have been negative. Historical, last 2 quarters have been negative, which means that the Fed will probably be less aggressive in trying to slow down the economy because they've got to take into cognizance the fact that we are in a recession, like it or not, and whether they admit it or not, they've got to take into consideration that we are in a recession. And so again, I think the Fed can raise by 0.75 now. It'll be their last aggressive one, and I think we're going to get a much lower interest rate increase in September. In fact, I think that's going to be the end of it. I think we're going to get a break or a pause, or maybe even 25 basis points in September. All right, then overall this whole week, another thing which can really affect the markets is earnings. We've got a massive earnings week this week. Okay, so today not much going on, but from tomorrow, Wednesday and Thursday, we've got huge earnings coming out this week. Here's a chart of what it looks like. You can see Microsoft happens tomorrow, Visa happens tomorrow. Then you've got on Wednesday, you've got some big names. You got the CME group happening on Wednesday. You got Qualcomm happening on Wednesday. You got some big ones. Thursday, you've got Amazon. And I think sometime this week, you've also got Facebook. When is Facebook? Facebook is on Wednesday. Wednesday is Facebook as well. In fact, let's quickly have a look at what the earnings look like. So what you got to notice is 40% of the entire NASDAQ, 40% of what make up the NASDAQ, are reporting their results over a 3-day period this week, which is Tuesday, Wednesday, Thursday. So you take Apple, Microsoft, Amazon, Alphabet, Meta, Qualcomm, T-Mobile, Intel Corp. Those all report Tuesday, Wednesday, and Thursday this week. That's when these guys report earnings. And earnings for me is the final frontier. So we know about inflation. The inflation narrative has already been priced in, but everyone's pricing that earnings expectations will be met. And if earnings expectations are missed at large, in other words, if a lot of companies miss their earnings expectations, then you can expect another leg down on the market. So you've got to keep your eyes on who's reporting and how they are going, not relative to previous quarters, but relative to expectations. Remember, everything is around expectations. The actual numbers don't matter. Whether or not they improved quarter on quarter doesn't really matter. It just goes against expectations. So we'll be covering what the expectations are, and we'll also cover what the actual earnings are, and then we'll decide whether or not we're above or below expectations. This is the final frontier, and it can scare the markets. And if you look at the previous three corrections, the previous three recent corrections have come because of bad or disappointing tech earnings. So every time the tech earnings come, bang, we'll go down. Bang, we go down. You got to watch the earnings. You got to watch the tech earnings. So all eyes on the tech earnings this week. And I mean, again, everything comes relative to expectations. It doesn't matter what the actual numbers are. It matters how we hit relative to the expectations. All right, so that is Monday, Tuesday, Wednesday, Thursday. And then there's another event that's happening this week, or two events that are happening this week on Friday. The first thing that is happening on Friday, we are having a massive Friday banter. Now, this could move the markets. So we got Scaramucci, we got Mark Yusko, and we got Dan Tapiero. That's happening this week on Friday. It should be huge. It should be huge. So make sure that you guys are tuned in. Don't miss out on that. Remember, it's brought to you by NordVPN. And then also on Friday, there's a massive options closeout. Remember, it's month end now, and there's a massive options closeout. Now, the options closeout, the crypto options closeout is a big deal in crypto, but it's a small deal relative to everything else in the world. So the options closeouts only really matter if the market is the macro force, and that's going to move crypto in the direction of wherever the markets are going. But within that, there's a little micro force, which is the options closeout. And right now, we have, let's quickly look at where we are. We have, it's quite a big one. It's on Deribit, it's $1.6 billion notional, and that expires with a max pain price of 23,000. Okay, so that's a bit higher than where we are today. Then on Ethereum, I think on ETH, I think the number is about 1.5. So the point of max pain on Ethereum is about 1.5. So we've got to watch the week. We've got to see where all the events of this week take us, and then the last, like, what will push it either over the line or behind the line is the options closeout. So the options closeout is just, it's a mini force within a big tide that might be able to push us one way or another. Either way, what I'm looking for this week is to either take us convincingly above the 200-week moving average and put us back into trend, or to invalidate everything and maybe even take us one step lower and then bring us down to, I don't know, where Carl always says we're going, which is what, 3,000 or 1,000. No, but I mean, I'm expecting, we've been under here for 5 weeks, and this is all fun and games. You know, being under the 200-week moving average for 5 weeks, it's all fun and games, and we can attribute it to a black swan event. But now it's time to either make it or break it. You can't hover under it for 15 weeks and then say, oh, well, the trend is still up. So I think we've got to, if this is going to be a black swan event like COVID was, then we got to get over this. And I think that this week is critical in the make it or break it. And if you ask me how I look at the charts here, I think that this is the week where we break up. I think that if you take the options close out at 23,000, I think that this is the week where we get the options close out 23,000. Bitcoin goes towards the point of max pain and we close above it. But hey, I may be wrong. There's a lot happening this week. There's, as I said, there's earnings which could move the whole market. There is the US GDP numbers which could put us into recession or not. I'm actually hoping the US is in a recession on paper. And then there's also Powell and the FOMC meeting. And remember, we'll be coming to you live for all of them. We'll be live, I think, pretty much for all of them, right? Yeah, we'll come up live with all of them. All right, let's go. I mean, look, if we do get above this 200-week moving average, then to me, as I said to you, it's almost like a license to start opening your money, your wallets, and deploying, whatever you've got left to start deploying. This is probably the last part where you want to deploy it, and that's because we may be going lower. We may go lower. It's just we may be going lower. But if you look at it in the big scheme of things, for long-term investors, and I'm glad that I ran a poll on my Twitter. I want to show this to you guys, and I'm actually glad at the answers that I got here, because I asked you guys, I asked my user base, and I said, where is the most money that you've ever made in crypto? And what you can see is that 63.1% of people say that the most money they ever made in crypto was actually just buying and holding, which is encouraging. It's super encouraging, because this is how I've made most of my money, and I believe that this is the best way to do it. Dollar cost average and buy and hold. 63.1% of people said that that's how they made the most money. 16% said they made money day trading, and 20% of you said 1 to 3 months hold. But as I said on my Twitter, the biggest whales that I know, the biggest OGs, the guys that have made the most money, have been around for multiple bear markets. And that's not to say that they've been around for a long time so that they ended up buying cheap, because that's true. They did actually end up buying cheap. But more importantly, they learned all the lessons. So you've got to be in the market. You need time in the market. There's no way that you can come into the market and start making money in your first bull market, because you'll generally pretty much lose it all. You're probably part of the 68% of crypto investors that are now currently underwater. In fact, over 70% of crypto investors are currently underwater. And if you are in that, the lesson for you to learn is that you shouldn't try and time this market perfectly, because you're never going to time the top and you're never going to time the bottom. It's never going to happen, no matter who you are. Even Carl Dupes doesn't time the top and doesn't time the bottom properly. No one's done it before. The best way to do it is to find levels where you're comfortable, and then dollar cost average only into quality, and not to get caught in the momentum trading and in the hype trading and in whatever else. And so if that's how you look at things, then you look at the long-term trend of Bitcoin and you go, hold on a second, how many times has Bitcoin been below or close to this 200-week moving average? And you realize 1, 2, 3. And what happened every other time? Every other time, Bitcoin went up aggressively. So let's just quickly go from here and let's go to the top. So there, Bitcoin did a 4x from where it touched. Then let's take this one over here. And let's see, how did Bitcoin do relative to that time? Bitcoin did a 11x, okay, in that time. So what we do know is that if the trend continues to go up, maybe it'll be a week, maybe it'll be a month, maybe it'll be a bit longer, but ultimately, eventually we're going to start to recover. And when we do, we'll form another one of these, and then you can expect Bitcoin to between 4x and 10x, and you can choose what the number is, because every forecast that you make is probably going to be wrong. So the idea is that you're not trying to time the bottom. You're trying to find levels where you're comfortable to start dollar cost averaging. And to me, when I see this is a good level for us just to dollar cost averaging, to start dollar cost averaging. It may not be the exact bottom, but for me, it's good enough. The next question is, what do you start dollar cost averaging into? Now, in the previous bear market, it was kind of accepted that the only dollar thing you can dollar cost average into, the only sure thing, is Bitcoin. But this market is very different. And what we've realized is that it's not only Bitcoin. It's not like 2017 where we thought most crypto would die and maybe Bitcoin would stand a chance of surviving. We now know that Bitcoin's going to be here forever. We know Ethereum's going to be here forever. We know that there are other protocols that are going to be here forever. And so you've got a license to dollar cost average into all of them, as opposed to just dollar cost averaging into Bitcoin. And in fact, you could probably argue that if you're going to dollar cost average into just Bitcoin, you may be doing yourself a disservice. And the reason why you're going to be doing yourself a disservice is because there are things that you can dollar cost average into, which are have a much higher upside than Bitcoin, and probably have a very, very, very good chance of survival. And if they survive, they'll get the upside. I'll give you some examples. One of the things that I'd be dollar cost averaging into more aggressively than I'd be dollar cost averaging into Bitcoin is Ethereum. And pretty much I'll show you why. So Ethereum, that's the Ethereum chart, but that's not important. Let's go to the ETH BTC chart, because that's probably the one that is a little bit more what we're looking for. But look at that chart. So if you would have been here relative to Bitcoin, you would have made an additional 45% relative to Bitcoin. And that's been the ETH story all along. In fact, if you look at the ETH dominance, what you're realizing is that the ETH dominance is starting to grow. So the ETH dominance is actually starting to grow. So ETH is starting to eat Bitcoin's share of people buying it in dollar cost averaging into it. And Richard Hart said it correctly. Now, I mean, I don't agree with everything else that Richard Hart says, but I do agree when he says you could get 2,000 ETH for one Bitcoin in the ETH ICO. Now you can only get 14. So what it shows you is that relative to Bitcoin, ETH has performed pretty well. So I'd be putting some money into Ethereum. Give another one that I'll be putting in. I think tomorrow or the next day we'll actually do a full list. But one that you can't ignore anymore is Uniswap. So you remember, Uniswap is all about usage and fees. I showed you a chart the other day where Coinbase and Uniswap now have equal volume. So Coinbase and Uniswap are now exchanging equal volume. And what you're seeing here is another confirmation metric, which says that, look, Uniswap now has more fees than Ethereum, Binance Smart Chain, Bitcoin, Aave, all of these combined don't make up as much fees as Uniswap makes. So these are the kind of things that you want to be dollar cost averaging into. It's not only about dollar cost averaging into Bitcoin. So whenever people say to you that it's you must only dollar cost average into Bitcoin, only dollar cost average into Bitcoin, nonsense. This bull market, this bear market and the next bull market are going to be very different from the ones before. Very, very, very different from the ones before. All right, I know we have a guest here today. Let's just ask Fred. Fred, where's Gareth?
Give me a second.
Almost us. Okay, look, while we're waiting for Gareth, let's quickly go through what's happening with, what do you want to talk about? Do you want to talk about FTX and Voyager, or whether Elon did or didn't sleep with Sergey Brin's wife? What's more important?
I think the Voyager thing.
Tell us in the comments what's more important. Do you want to hear about Voyager and how they declined the FTX proposal, and why they declined the FTX proposal, and what the hell the FTX proposal is? Or do you want to talk about whether Sergey Brin's wife did actually sleep with Elon?
Maybe after Gareth.
Okay, you tell us in the comments whether you want to hear about Elon or whether you want to hear about
We'll ask Gareth.
about Voyager. Kyle, you telling up the votes. In the meantime, I'm going to bring in Gareth. Gareth, my friend, how are you?
I'm doing well, Rand. How are you?
So good, my friend. So good, so good. Gareth, the last time you came on my show, bro, I've got to play this. Because it doesn't exist unless it's somewhere on YouTube. Okay, so I'm going to play this. Okay, let's play it. All right, DJing time. It's been great. The foreplay has been amazing, but now it's DJing time. Let's talk about trades that you guys would actually be putting into the market. So the last time you came on the show, you were wearing the very same shirt with the very same open collar. Okay.
I did that on purpose. I did that on purpose.
What you're doing can be crypto, can be anything else. Gareth, I'm going to start with you. 30 days. What would you be doing for the next 30 days? You told me you long Bitcoin. If I were to talk to you again in 30 days, what are we looking at?
So this is tricky because Bitcoin's already made a move up. I would love to pick Bitcoin. So are we looking for biggest percentage or just a solid trade?
Let's talk about a basket of trades. So it doesn't have to be a single trade. You could say long Bitcoin, long NASDAQ. You could say long Bitcoin, short NASDAQ. You could say short dollar. I mean, I'm just trying to get an idea if you were.
I'll do short the dollar, long silver, and what the heck, long Bitcoin for the next 30 days.
Wow. All right. So short the dollar. Let's quickly look at that trade. Let's quickly go. You never thought I'd do this to you publicly, right?
You're also in the same shirt.
Okay. Kyle points out that I'm also wearing the same shirt, just for the record. All right. So it was July 8th, right? It was July 8th. There we go. That was the top for the dollar. And you shorted the dollar. So that's 141. You also said, let's go to Bitcoin USD. You said go long Bitcoin USD, and that was on July 8th. July 8th, Bitcoin, let's just zoom in a little bit. So let's go to July 8th. July 8th, you good on that trade? You good? You're about equal on that trade. And I think that the silver trade's also about equal. All right, so that's the past. How are you trading this week? Because this week is like one of the craziest weeks I've ever seen. With the FOMC meeting, the GDP numbers, there's an options closeout at the end of the week. You've got earnings left, right, and center. How are you trading this week? Call up the charts. Let me see the charts.
All right, so let's bring up some chart action here and take a look at the Bitcoin chart, because I actually think the Bitcoin is looking beautifully solid here. So,
whoa,
like you guys really like to zoom in on me, huh?
Okay, hold on. It's the shirt. We're trying to work out what.
Next time we're just taking it all off. Nah, just kidding. But basically what you have here is this is what we would consider bullish consolidation. And as long as you see this 21.8 hold, and we're right on that right now. So this was a high pivot, high pivot, high pivot. We broke out, we confirmed. Now you're retesting. So this was resistance over here. It's now support. That means that we should see a move up coming in Bitcoin later this week. And again, I would guess that you're going to take out the 24.2 level, and I think you'll probably get to at least 25.5. I even think 28,000 is in the cards over the next 2 weeks or so. So I still have a little time left from that 30-day segment, right? So I'm sticking to still long Bitcoin here.
Okay, so long Bitcoin, and then I'm assuming that if you're longing Bitcoin because you're looking at two things. One is you're hoping that it's not going to break below this 21.8. That's right. If it breaks below 21.8, thesis invalidated.
If it stays below there for more than 24 hours, yeah, I would want to see it. I mean, pierces are pierces. They do that to wipe out stops, but I wouldn't want to say it stay below there for a day or two. Okay,
so if that's the case and you think we're going to 28, that means that your next chart, which is the Dixie, I think you're going to tell me the Dixie is going below this trend line.
Yep, that's exactly what I think. I think what you're doing here, you've reversed, now you're going sideways, and I think you're going to get another move down in the dollar on the back of the Fed. So on Wednesday, look for the dollar to decline, and then I think that'll be a catalyst for a rally in things like Bitcoin as well as other things.
So what do you think is going to happen on Wednesday? I mean, I think that the market's pricing in a 75 basis point rate hike on Wednesday. I think that's pretty confirmed, right?
Yep. Yeah, I think anything else would be somewhat shocking. There's a small chance of 100 basis points since they don't meet again until September. So there's like 2 months where they can't do much. I mean, they could do a surprise rate hike, but remember the Fed doesn't like to show that they're out of control. So it's very unlikely they would do that. So 75 basis points. And then I think they're going to be data dependent going into September. My guess is they're almost done with their rate hike cycle, right? So again, we've already seen the economy come in weaker and weaker. Every piece of economic news is showing weakness out there, from housing to PMI to jobs. Unemployment numbers are still low, but that's a lagging indicator. You'll see that start to uptick in the coming months. So my guess is by September, they might do 25 basis points. But for the most part, my guess is they're done, and that's going to be good for a Bitcoin type move up in the near term.
Sounds amazing. Gareth, I know you've been around for a while. What to you constitutes the definition of a recession? Like if I would say to you, Gareth, I don't know anything about finance. What is the definition of a recession?
I mean, it's the economic definition is 2 straight quarters of negative GDP growth, right? But that's very unfair to most working Americans and most working people around the world, because there's a large portion of the population that's in a recession already, because they're not making that much more than they were before, but they're paying such higher prices for food and energy, right? And even everyday materials have gone skyrocketing higher. So I think you have to start breaking recessions down into key metrics. The rich are doing fine. Everyone else, honestly, is probably in a recession.
So what do you think of the fact that the White House is now saying that even though we may get 2 quarters of negative GDP, it's not technically a recession, because we've got to look at a whole lot of other indicators like the labor market, consumer and business spending, industrial production, income. I mean, what's going on here?
Yeah, I mean, bottom line is they're hoping and dreaming. Just like the Fed, the government has a bad historic track record of being correct on anything. So I think you have to understand what you're dealing with. You're dealing with people that have to say things for political reasons to make it sound good. It's not the reality of the situation. So again, you will see unemployment start to spike higher. There will be pressure on the Fed to stop hiking rates. Inflation is coming down. It's hard to see that, but if you look at gasoline prices, that has happened. So you're going to see a kind of a fade on those inflation numbers, and then that will be the catalyst for the Fed to say, okay, we're going to step back now and go basically no more rate hikes, so that we can see where this economy goes. But basically, them stopping, the markets are going to like that. Bitcoin is going to like it. Risk on assets, at least for the near term, will like it.
All right, let's go to Thursday. What do we prefer on Thursday? As people who want the market to go up and Bitcoin to go up, what do we prefer on Thursday? Do we prefer a negative GDP growth number, cementing the fact that we're now in a recession, so to speak? or do we want a positive number? To me, intuitively, it feels like we want a negative number. We want a big sign going, we're in a recession, we're in a recession, we're in a recession. Fed, you cannot tighten anymore. What are you thinking?
So I think what the market wants, the market I don't think wants a recession. We don't want to see negative GDP growth, because if we're already in a negative GDP growth and the Fed is still tightening, that's very bad. That means you're talking really bad recession to maybe depression. So I think what the market wants to see is a small growth in GDP, something like 1 to 2%, where it's just enough to say, okay, the Fed can step back, but we're not in a recession, but not high enough to say the Fed has to continue to hike dramatically. So it's almost like that Goldilocks number where it's not too hot, not too cold, just in the right spot.
The Goldilocks number, I love that. So, I mean, so you think that if we get negative GDP growth, we're in a recession, the market takes that badly. The market starts dropping.
Yeah, because this is the problem, is you still have high inflation, right? It might be coming down a little bit, but if we're already in a recession and the Fed can't, I mean, remember, the Fed can only start printing again and saving us from a bad recession if they get inflation back to 2% or under. And they're not even close to that. I mean, we're still at like 8 to 10, 11% inflation. So that would be really bad if we got some of those numbers. I think you see a massive exodus from stocks, and even risk on assets would sell off like crypto.
Wow. That's a big week. Gareth, much love, brother. Thank you so much. Love the shirt, bro.
Yeah, thank you so much. And I'll see you in Dubai, I heard, huh? Later.
We'll see you in Dubai. Yeah, we'll see you in Dubai. Can't wait, brother. Can't wait. Dinner on me, my friend. Dinner on me. Let's pick a night and dinner on me. All right, that's Gareth, part of the Banter fam, really, part of the DNA of the Banter fam. All right, we've got a few more minutes. Let's quickly look at, what did they decide? They want to see. So Voyager was the vast majority. So they don't care whether Elon slept with Sergey Brin's ex-wife. Okay.
They did say protect your wife, though. Elon's coming back to this.
Yeah, I mean, I went to a party with Elon Musk the other day. Now, I'm worried now. I'm going to get home and I'm going to have to divorce my wife. It's a big problem. All right, let's talk about Voyager, because we do have a few more minutes. So what happened with Voyager is FTX made a bailout proposal to Voyager. And they said, look, instead of the Voyager holders having to wade through a long and tedious bankruptcy process where, all these lawyers and whatever else will start charging a whole lot of consulting fees to restructure and whatever else, FTX said, look, we'll make you a better proposal. We will buy the debt, or we will bring the debt into FTX, excluding the Three Arrows capital debt. And what we'll do then is, for anyone that opens an FTX account, we will give them the equivalent of what they've got deposited, or 75% of it, in their FTX account. So what FTX is doing here is they're taking this opportunity, they're taking this Voyager, and they're saying, look, Voyager have a huge book of customers. And if we take them over, not only do we now get into lending business, which we're not currently very strong in, but we also get a whole lot of customers to open FTX accounts. And for that, FTX is willing to pay a lot of money, especially if the customers are going to start transacting and using the platform. That's exactly what's happening. And today, what happened is you can see that FTX, or that Voyager specifically, they declined it. They denied it. They said, they published thing. They said, look, they're saying, Alameda, FTX purchases Voyager's cryptocurrency assets at fair market value, which excludes the Three Arrows capital loan. No customer will be made whole under the proposal, nor will any cryptocurrency be returned to customer under the proposal. And what they're saying is that the proposal harms customers, and they will entertain any serious proposal made. So they declined Sam Bankman-Fried's very generous offer. And I think what we've got to look out for here is FTX are not doing this because they care about crypto. FTX are doing this because they're seeing an opportunity, because they've got all the cash to buy up more customers. So, whereas Sam Bankman-Fried pitches this as, I'm trying to save everybody, etc. And there is something in what he's saying. I mean, the bankruptcy process is long, and it's going to take a whole lot of costs, and those costs are going to come out of what could have been returned to shareholders. But ultimately, I don't think it's a good enough proposal. Voyager don't think that, and Voyager also have another proposal which they say is better. So for now, no deal. But let's see. I mean, maybe it's just a negotiation tactic. In the meantime, we're just watching what SBF is buying. I mean, here's a list. You guys can see it. FTX US, FTX, and I made a research of what they're buying in this and what they're investing in. Keep your eyes on this, because you may actually pick up some good things to invest in. All right, lastly, very, very quickly, did Elon Musk actually sleep with Sergey Brin's wife? And is that what caused the divorce? I don't know. I don't think so. I mean, Elon Musk posted a whole lot of pictures this weekend, I think, at Sergey Brin's house or somewhere, having a party with Sergey Brin. So I'm not sure that, I don't know, if someone slept with his wife, I don't think they would be partying together.
Doesn't make sense.
Doesn't make sense.
But you know that rich circle, they have their own way of doing things.
No, I don't think so. I don't think so. Anyway, listen, tomorrow we'll do some 10x with BYBIT. So if you don't have a BYBIT account, click on the referral link below, sign up to BYBIT. Tomorrow I'll do 2 10x's. So deposit money into your account tomorrow, I'll do 2 10x's. We'll watch the data. We'll watch the data. There's a lot of data. We'll watch the data. Follow me on Twitter because it's super hard to keep you updated here on YouTube. Let's rather follow me on Twitter. Remember, if you haven't watched Sheldon's show, go and watch Sheldon's show. I think one of his best shows that he's ever done. There's the show over there. It's called Critical Week for Bitcoin. And then remember that if you want to come to Korea, but only if you're going to come, please apply for tickets using the referral link below. Anyway, guys, listen, much love. We'll see you guys again tomorrow. Until then, have fun, trade well, my friends.